Family, the market did something well today. NVIDIA just reported a record-breaking $57 billion quarter. AI demand is exploding. Cloud GPUs are sold out, and NVIDIA is now shaping the entire stock market narrative. But here is where the plot thickens. I added 20,000 US dollars of my own money into my margin account right before this earnings explosion. And today I closed the real trades, made real profits, and repositioned ahead of the macro data and market pullback. So in this video, I'm going to show you exactly what I did, why I did it, and how I am positioning for the next move. By the end of this video, you are going to fully understand what NVIDIA's historic earnings really mean for the AI market, why the market pumped in the morning and sold off later, the job numbers and macro data that triggered the reversal, my exact trades including closing Palantir for profit and opening new SOFI cash secured puts, how I am using my new 20K to scale my strategy safely, and the fundamental checklist that I use before trading and investing in any stock. So stay with me to the end, especially if you are learning how to trade and invest and build wealth the disciplined way. But before we dive in, this is not financial advice. I'm simply sharing my personal journey, my real money, my real trades, and my own learning process. Always do your own research. Let's start with the portfolio. My account, last time I checked, it was sitting at 65,539 Canadian dollars. My total profit and loss since inception is now plus 15,944. That is plus 32.15% symbol rate of return. But you will notice that the percentage dropped significantly. Nothing wrong with the performance. It's simply because when I added the 20,000 US dollars of new capital into my margin account, it pulled the average down from over 77% since inception. So after almost 2 years of testing my options trading strategies, cash secured puts, covered calls, lips, and managing risk carefully, I finally feel confident to scale up. The margin account gives me flexibility for doing cash secured puts, covered calls, efficient capital use, and rolling positions. Here in Canada, we have registered accounts such as tax-free savings account, registered retirement savings plan. We are not allowed to trade and to employ some of these strategies that I employ, such as cash secured puts in those accounts. So I'm building this account for longer term option strategy under margin structure. And of course, this is just the one that I choose to share with you publicly. Now, let's have a trade recap and talk about Palantir and SOFI cash secured puts. Palantir, you recall that I sold a cash secured put with a strike price of $160. Well, I sold that cash secured put when Palantir went up early in the morning and closed, I think it was 65 US dollars. That's the money that I realized. I also sold another cash secured put with the strike price of 145 for January 2, 2026 expiry date, and I already closed it for another $65. So basically, I day traded for a few minutes. I made that $65. So this is the strategy that I use. Sometimes I just do this across stocks that I see that they have been oversold, and after passing the checklist that I'm gonna share with you, and I make some quick profits. So far, I did take 3 cash secured puts, and I took the strike price of $23 expiring January 2, 2026, and the premium range was $37 to $47 per contract. So far, I was oversold, sitting below the Bollinger Band, and this is an opportunity, in my view, for premium for that kind of risk. I believe SOFI is a $35 stock, but again, I will manage these positions the same way that I always do. I sell a cash secured put. If I get assigned, I get the shares and I sell a covered call and I repeat the process. Now, let's talk about the macro recap, why the market pumped off and then sold off. Here's what happened today. The market opened strong. NVIDIA earnings lifted sentiment. Tech was green. Futures were green. I was suspicious that they might be profit taking when I saw the futures and the market rallied after NVIDIA beat earnings. But then 10 minutes later, as the market opened, everything flipped red. Why? The jobless claims also came in and the market didn't like them. Based on this morning data on investing.com, initial jobless claims came mixed but leaning higher. Non-farm payroll was 119,000 versus a forecast of 53,000. Unemployment rate was 4.4%, higher than the expected 4.3%. Average hourly earnings came in plus 0.2%. This mix, in summary, tells us that the labor market is cooling, the economy is slowing, inflation may be moderating, but recession fears are increasing. This is why, in my view, the market pumped and then sold off sharply. Now, let me explain in detail the NVIDIA's blockbuster earnings, because this earnings report was historic. According to their official filing that I got on their website, record revenue of 57 billion was reported, up 22% from last quarter, up 62% year over year. This is insane. Data center revenue came out as 51.2 billion, up 25% from Q2, up 66% year on year. This is driven by massive cloud GPU demand. Earnings per share came out at $30, a huge beat. Gross margin was 73.4%. Jensen Wang said Blackwell sales are off the charts and cloud GPUs are sold out. AI demand is compounding. This is enormous for market because NVIDIA is the backbone of global AI infrastructure. I believe they have about 80% market share. Cloud providers such as Microsoft, Google, OpenAI, Oracle are buying everything they can. AI chips are not slowing. Demand is exponential. They are building supercomputers across the US, the UK, Korea, Japan, and more. And they guided the next quarter to 65 billion in revenue, even higher, but they excluded the China revenue forecast because of the political dynamics on the trade talks, which I think is a very smart move. You don't want to have these big surprises in the downside. Now, in simple terms, the AI super cycle is alive and accelerating, in my view. Let's move into my personal investing framework. And this is beginner friendly, by the way. When I look at companies, especially high growth tech, I start with fundamentals. Cash and cash equivalents is something that I look into when I'm considering investing in businesses. I like the health balance sheet, which attracts long-term capital. I like growing free cash flows because this is something that shows me that if you remove depreciation, this business has money that they can use to pay off and to do other things in addition to the cash and cash equivalents on the balance sheet. Now, I like businesses that have increasing profitability, growing margins, operating income that is all moving in the right direction. And I also like businesses that have low declining long-term debt. I like leadership with integrity and who are good at executing what they say. NVIDIA's management, for example, they are very good, they are strategic, they are building partnerships and an ecosystem that are world class around the world. Jensen was in Asia. He is traveling around the world, making sure that the supply chain and the business is well aligned, just as an example. Macro alignment is another thing that I look at. I always consider inflation, job data, rate policy, and global risk. Then once the fundamentals check out, I use options to generate income and manage risk. That's it, guys. So how does NVIDIA's earnings influence my portfolio? To me, this means that I'm not chasing NVIDIA at all-time high and any other stock. I am instead observing volatility, waiting for pullbacks, focusing on cash secured put opportunities for the stocks that are oversold, that I believe are undervalued, and staying disciplined with some stocks that I'm trading, such as Palantir, SOFI. I still have HIMS and Doximity stock that I have cash secured puts on, and I am keeping an eye on the macro risk. AI, in my view, will continue driving the market narrative, but only disciplined traders win long term. I was reading this tweet from this famous economist. He's a very famous economist, and one of the things that he mentioned, that he was like 63% or more companies in their recent earnings, they mentioned AI. So the risk is that if they don't deliver up to the expectations, the market might then drop. And if you look at the average forward earnings projections, they have been really on the high side. So I am being extra cautious with the stocks that I am trading. If you are getting value from this breakdown, hit that like button. It tells YouTube to push this video to more people, and please subscribe if you want simple, clear trading updates every week. It means a lot to the channel and helps us reach more people who want real, transparent trading content. For those who want deeper learning, I run coaching sessions where I share these updates in real time with my students. Case secured put setups, risk management, and long-term investing frameworks. If you want to join, visit www.streetwiseeconomics.com. Spots are limited because I work with each person closely. To close this video, NVIDIA just delivered one of the strongest quarters in corporate history. AI demand is accelerating globally, but markets are still volatile. The labor market is shifting, and we must stay humble. My role is simple: manage risk, trade high quality fundamentals, stay disciplined, keep learning. This is just the beginning. Thank you for watching. Stay streetwise, stay focused, and I will see you in the next video.